Hey guys, welcome back to our channel. Today, we'll explore 5 amazing assets that have proven to be lucrative for investors. Investing in assets is an effective way to achieve financial freedom, but not all assets are created equal. By understanding what makes an asset valuable and profitable, investors can build a strong financial foundation. From the tangible value of raw materials to the passive income generated by royalties, each asset has its own unique advantages and disadvantages. So whether you're an experienced investor or just starting out, this video will provide valuable insights into how these assets can make people rich. Raw materials and commodities. Raw materials and commodities refer to natural resources like oil, gas, minerals, and agricultural products such as wheat, corn, and soybeans. These raw materials can be traded on commodity exchanges, and their prices are determined by market demand and supply. Investing in raw materials and commodities can be profitable because they have the potential to provide high returns due to their scarcity and demand in the market. For example, if there is a shortage of oil, the price of oil can increase, resulting in profits for investors who bought oil futures or stocks in oil companies. Moreover, raw materials and commodities are often considered a hedge against inflation since their prices tend to rise during times of inflation, and their value can hold up well in the long term. However, investing in raw materials and commodities can also be risky since prices can be volatile and subject to external factors such as political instability, weather patterns, and technological advances. Brand and goodwill. Brand and goodwill are intangible assets that can significantly increase a company's value and profitability. Brand refers to a company's identity, reputation, and image in the marketplace, while goodwill represents the value of a company's relationships with its customers, employees, and suppliers. Building a strong brand and cultivating goodwill can increase customer loyalty, boost employee morale, and enhance a company's reputation, which can translate into higher sales and profits. For example, companies like Coca-Cola and Apple have built a strong brand that's instantly recognizable around the world, and their customers are willing to pay a premium for their products. Goodwill can also be a valuable asset when a company is acquired, as the acquirer is essentially buying the intangible value of the company's relationships and reputation. Investing in companies with strong brands and goodwill can be a smart strategy for investors, as these assets have the potential to generate long-term value and profits. Royalties. Royalties are payments made to the owner of a property or asset in exchange for the right to use that property or asset. In the business world, royalties are most commonly associated with intellectual property, such as patents, copyrights, and trademarks. When a company wants to use someone else's intellectual property, they must pay a royalty fee to the owner of that property. Investing in companies that own valuable intellectual property can be a smart way to generate royalty income. For example, companies like Qualcomm and Dolby Labs own patents that are essential to the functioning of many electronic devices, and they earn royalty income from the manufacturers of those devices. Similarly, investing in music or book royalties can be a way to earn passive income from intellectual property. Mutual and index funds. Mutual and index funds are investment vehicles that pool money from multiple investors to buy a diversified portfolio of stocks, bonds, or other securities. The main advantage of these funds is that they allow individual investors to gain exposure to a broad range of assets without having to buy them individually. Mutual funds are actively managed by a fund manager who selects and trades the underlying securities in an attempt to outperform the market. In contrast, index funds passively track a specific market index, such as the S&P 500, and aim to replicate its performance. Investing in mutual and index funds can be a smart way to build wealth over the long term, particularly for investors who don't have the time or expertise to manage their own portfolio. These funds offer diversification, professional management, and liquidity, which makes it easy to buy and sell shares. Real estate is a physical asset that includes land and any permanent improvements attached to it, such as buildings, homes, and commercial spaces. Investing in real estate can be an effective way to build wealth over the long term, as it offers several potential benefits, including appreciation. Real estate values tend to appreciate over time, which can lead to substantial long-term gains. Cash flow. If you rent out a property, you can generate rental income that provides a regular cash flow. Leverage. Real estate can be purchased with leverage, meaning that you can use other people's money, such as a mortgage, to invest in a property and amplify your returns. However, investing in real estate also comes with risks, such as property damage, tenant vacancies, and changes in the local real estate market. So, it's important to have a solid plan for financing, managing, and maintaining the property to maximize its potential for income and appreciation. So these 5 assets have proven to be effective tools for building wealth and generating income. However, it's important to note that investing in any asset involves risks, and it's crucial to do your research and seek professional advice before making any financial decisions. By understanding the potential benefits and drawbacks of each asset, you can make informed choices and build a diversified investment portfolio that suits your goals and risk tolerance. Well, now it's time to end the video. Thank you for watching. Feel free to ask any questions related to these in the comment section, and don't forget to subscribe to our channel for more informative videos like this.